The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody, welcome, welcome. This is our home buyer workshop. My name is Wayne Hitt. We also have lender extraordinaire Brian Sachs here with us.
Thank you. Glad to be here, Wayne.
Thank you, Brian. Yeah, so we just wanted to get something together for the home buyers out there. It could be kind of a tricky market. So tonight we're going to spend about 45 minutes to 50 minutes going through a little home buyer workshop to try to help put some pieces together, make the transition, make it easier for you out there house hunting these days. Again, my name is Wayne Hitt. I've been doing this for 19 years now. I know Brian's got me beat for sure, but we are two seasoned veterans. We've been through a lot. We've seen a lot. We've helped a lot of people with a lot of really fun stuff get their houses. Very, very happy customers. So we have a lot of knowledge that we like to share as much as possible. So why not give it through a platform like this? You know, it seems to be some of the most helpful.
Well, you know, Wayne, the more knowledge you have, the better decisions you make. And you and I
That's
are both
correct.
into having our clients make good decisions.
Yes, definitely. So we'll get right into it. We're not going to give you too much homework. Just kind of sit back, relax, and we'll run the show here. So starting out, steps to using a buyer's agent. That would be yours truly. So there's some important steps here. Number one, you want to establish some home buying goals. You also want to get pre-approved for a loan, and we'll go into a little bit more details with these as we go through the workshop here. Once you establish your goals, your wants, your needs, what you want, what you don't want, once you get pre-approved, and that's where Brian comes in, along with some other things that he's fantastic with. You and I will hit the streets. We'll view some houses. From there, we find something that you like. We'll make an offer. From there, we then negotiate the best terms and price for you. And then we'll move on to loan application. A little bit more Brian. You're going to be stuck with Brian and I a lot throughout this process. We'll then get the home inspected. From there, appraisal. We'll have some title work we'll have to do along the way as well. The final walkthrough. That way, we want to make sure the property looks as it did when we first saw it. And then we'll go to the closing table, the settlement. What you'll learn today, aside probably from some corny jokes, you'll learn the advantages of using a buyer's agent. You'll learn the 3 types of lenders and which lender would be best for you, depending on your situation and what you're looking for. You'll learn how to get more take-home pay to pay the mortgage that you're going to be signing up for. The types of financing that's going to be best suited for you, your situation. You're going to find out how to buy a home even if your credit isn't tip-top. And trust me, Brian is a whiz with that. You're going to learn some costly mistakes to avoid when buying a home. Like I said earlier, it could be a little tricky out there. So having someone to kind of navigate you through the process is very key. You're going to find there's one document that increases your negotiating power. A little sneak peek of that. We'll tell you about that later on. And then we're going to talk about what I just briefly mentioned a little earlier. What is the title company, title insurance, and what's the difference between the policies they give out, owners and lenders policies in regards to the title. We'll get into that as well. So without further ado, who's ready to own a home? Your home.
So thank you, Wayne. And you know, I'm honored to be here with you. You're a true professional, and I love the things that we do to help people get into a home. Many times they don't think they can get into a home, and now they're happy homeowners.
Yeah.
You know, there's an interesting statistic, Wayne. I'm not sure if you saw it or not. You probably did. But there was a company that, and I forget the name, so I don't want to misquote, but there was a national company that did a study, and they were looking at all the markets in the United States, and they were trying to determine in which cities it was cheaper to actually own a home than renting.
Hmm.
You know what the two cities were? In the top five:
Let me hear 'em.
Baltimore and Silver Spring.
There you go.
And so, I'm sure, we both hear all the time, well, I'm not sure if I can pay a mortgage. Well, guess what? If you're renting, you're paying a mortgage. It's just not your mortgage. You're paying the landlord's mortgage, which is kind and nice, but rents have been skyrocketing. So it's about time you had something to show for it. And really, in many cases, you're not only building wealth, you're building generational wealth, because the value of that home in 20 years, 30 years, 40 years really is life-changing for many families. So again, Wayne and I are here to give you knowledge, and the best way for you to make the right decisions for yourself is to have all the pieces of the puzzle. Wayne, sometimes I think we even over-educate, but that's okay. It's okay. So here's what you're going to learn. Wayne covered a little bit. We're going to talk about the 3 different types of lenders, how to get more take-home pay to pay your mortgage, what financing options are best for you, how to buy a home even if you don't have perfect credit. I saw a statistic. I guess I'm into statistics, but I saw another statistic. It's the only class I ever failed in college 4 times, Wayne, was statistics. So maybe that's why I'm always looking at statistics. But an interesting statistic is that 3/4 of Americans have a credit score of 660 and below. So we're going to talk a little bit about that. And while many agents, real estate agents and lenders are telling you what to do, sometimes learning what not to do is even more important, what mistakes to avoid.
That's correct.
And we're going to come clean and share it all, the good, the bad, the ugly. We're going to talk about that document that increases your negotiating power, and we'll jump right into it. So, and I just want to preface this by saying that we can't cover everything, okay?
Right.
What Wayne and I try to do is really look at each person individually, what your goals are, what your situation is, and maybe most important, and something that many lenders and real estate agents don't talk about at all, is your comfort levels. How do you get comfortable? So just because you can afford something doesn't mean you're comfortable with that. And so that's how we try to approach it. But why are you renting to begin with? I found that there's really 5 major reasons, and we'll try to tackle all of them here. Maybe you're new to the area. Well, okay, good to get your bearings, right? So I might even say, if you're brand new to the area and you've never been here and don't know where you are, maybe it's not a good idea to buy right away. Maybe it is a good idea to rent. That would be the only circumstance. That would be the only circumstance I would tell you, but maybe a short-term lease till you get your bearings. Maybe you think you don't have enough money for down payment and closing costs. We'll fix that. Maybe you've had past credit issues. I mean, who hasn't? Even a bankruptcy or a foreclosure. Maybe you heard somewhere on TikTok that it's too hard to qualify for a mortgage. Nothing could be further from the truth. Or you think
I love those dancing TikToks.
Yeah, there you go. And maybe you think you can't afford a mortgage. Well, I'm going to assure you that you probably can. So I guess, Wayne told you how long he's been in the industry, and he's a seasoned pro. I've been in the business, yikes. I feel like I financed George Washington's first cabin. But I've been in the industry 38 years, and, have really helped probably over 6,500 families over those years become homeowners. If my voice sounds familiar, my face looks familiar, I've had radio shows in Baltimore, and I've been the in-house expert for WBAL TV for 25 years. So I only tell you that because it's important to know who you're listening to, right? So let's jump into the programs. FHA. And before I even jump into the programs, I got to say this, Wayne, and I hope none of our audience at the workshop today gets offended, but I got to say it. Your friends, when you tell people you're looking for a house, your friends, your coworkers, and your family, they're all going to give you advice. Mm-hmm. And they all mean well. And they're just, why don't you do this loan? Why don't you do that? Why don't you, do so and so? The reality is their heart's in the right place, but they don't know your particular situation. And they may not know all of the products and all of the programs that are out there. So take their suggestions and then we'll talk about it. We'll talk about the pros and we'll talk about the cons. So FHA, I'm just going to give you a broad overview. FHA is the Federal Housing Administration. This is the loan. The highlights are very little money down, 3.5%. You're dealing with Mr. Wayne Hitt, who happens to be one of the most seasoned and expert negotiators in the Baltimore market. I've seen it firsthand. Sometimes you can negotiate various things from the seller. Now, it depends on the market. If you're in a buyer's market where there are, a whole bunch of sellers trying to sell their home, might be a little bit easier. If you're in a seller's market where there's more buyers than there are homes for sale, that could become a little more challenging. It's easier to qualify. They're much easier on credit with an FHA loan. You usually qualify for a little bit more home. The downside, you have to work with an FHA approved lender. The appraisal standards are stricter. I'm not sure that's a con, but sometimes the seller is a little hesitant with an FHA contract if their house is in need of some repair. We'll talk about a solution to that shortly. And then you're going to have monthly mortgage insurance and an upfront mortgage insurance. Excuse me. Then there's a VA loan. And if you're a veteran or a reservist watching, thank you. Thank you for your service. And here's one. Go ahead, Wayne. I'm sorry.
I just said definitely. Sorry. No, yeah.
Yeah, no worries. I mean, thank you for your service because we're here today because of you, Yep. So the benefit to a VA loan, I'm thrilled to say, it really is the best program out there for financing, and rightfully so. No money down, very liberal credit guidelines. You can be a reservist with 6 years of reserve and still get this VA benefit. It's one of the only VA benefits that you can reuse. You can buy a house, sell it, call Wayne, buy another house VA. Yep. Closing costs can be paid by the seller in the right market. Also a lender. By the way, did you know that? A lender can help you with closing costs? And I'm a lender. Here's the downside. It's only for veterans or a veteran and spouse. I actually have a family right now, Wayne, that are getting married at the courthouse because she's the veteran, he's not. And they're getting married at the courthouse and having a big family church wedding in about 6 months. So it's just going to be our secret, but there you go. And there is a mortgage insurance. If you are getting any VA-related disability benefits, that could be waived. Then there's your standard, bread and butter conventional loan, Fannie Mae, Freddie Mac. Generally 5% down, but there are programs with 3% down. You have to have 5% of your own funds. If you put 20% down, you get rid of what's called mortgage insurance. The downside, they're a little stricter on qualifying ratios and a lot stricter on credit standards. So let's talk about some of these myths, these things that you think but may or may not be true. I don't have cash. Okay, well, welcome to the club. I don't either. So I can't purchase a home because I don't have a lot of money for down payment and settlement costs. Well, how much do you need? 5%, 10%? All these answers are right, by the way. 3%? It depends. And that's why it's so critical that you come and speak with us at no cost, no obligation, so you can get rid of all these myths. But let's talk about, aside from down payment, what monies you need. You're going to basically need funds for down payment unless you're a veteran, and you're going to have closing costs. And closing costs are made up of lender charges, which are appraisal, credit report, underwriting, processing. You're going to have title company charges. They're going to have to do a title exam. They're going to issue owners and lenders title insurance. And when you're ready, folks, Wayne and I will break all these down for you in very specific, very specific fees and very specific figures. You're also going to need prepaid items. You're going to have to set aside money for property taxes, for homeowners insurance, for interest from the day you settle till the end of that month. So what do you do if you really don't have any money? Well, here's some ideas. One is you can get gifts from relatives. I mean, assuming your relatives are capable of doing that, right? Sometimes a lender can help. There are numerous grants that Wayne and I work with, federal, national, local, state, city grants, secured loans. Oftentimes we have borrowers who will borrow from a 401k. You know what the benefit of borrowing from a 401k is? Not taking the money, so it's not taxable, it's a loan. But when you borrow against the 401k, you're borrowing your own money and you're paying yourself back. So it's a beautiful thing. But we came up with something even crazier, okay? And this is something called GoFundMe, and we will actually set up a GoFundIt page for you. Look at this, your wedding gifts, family, they can contribute, no gift letters, no nothing. You all should take advantage of this, and we'll actually give you $2,000 on top of it. So if you're familiar with GoFundMe, we're the only lender that offers that program, and Wayne can certainly give you a web address. All your friends can contribute, even your enemies can contribute if you like.
And we build the page. We build it out for you, so there's no work.
Yep, there's no work, and as a mortgage company, we're going to give you an extra $2,000, so you can't lose. Myth number 2: I need good credit. So, by the way, when you call Wayne, say I want to go fund me page, a home funded, it's called.
Home funded. Yep.
Myth number 2: I need good credit. I can't buy a house because I had some credit issues. Well, welcome to life, folks. What is the minimum credit score? Do you know? 750, 640, 580? Do you know your score? All of these scores are minimum scores for certain products and certain programs. But I want to explain something to you, okay? I want to explain 2 things to you. Because here's the question I get asked all the time. Will you running
Me as well.
Say again?
Me as well.
Yeah, absolutely. Will you running my credit report hurt my score? No. The answer is no. N-O. Why? Because we're a mortgage company, and even if you have multiple mortgage companies checking your credit, as long as it's within a 30 to 40-day window, you're not going to have any problem at all. It doesn't impact your score at all. So here's what usually happens. We have folks come to us and they say, well, my score's 680. I saw it on Credit Karma, or I saw it on my credit card statement or my bank statement. Here's the truth. That is your credit score, but it's not the credit score we're going to use as a mortgage company. So let me explain. There are 3 credit bureaus in the country: Equifax, TransUnion, and Experian. They're called repositories, and each of them has literally hundreds of different methods for calculating your credit score. But there are three broad categories. There is a scoring model if you're applying for a store charge or a credit card. There's a scoring model if you're applying for an installment loan like a car or a school loan or a personal loan. And there's another scoring model if you're applying for a mortgage. Ours typically is the most, toughest one, I guess, or with the highest standard. So when I tell you, when you see that your credit score is 680 and I come back and say your credit score is 660, we're both right. But one model is for a mortgage and you're looking at the model if you're applying for a credit card. So I hope that gives some clarification. Okay. So what do you do if you had a bankruptcy? I've helped numerous, I actually wrote a book called Yes, You Can Get a Mortgage. But
I have that book.
do you? Awesome.
Yes.
So, the reality is you can buy a home even if you've had a bankruptcy, even if you've had a foreclosure. And you don't have to put a lot of money down and you don't have to pay high interest rates. So get all that out of your head. Now, one of the reasons you're renting might be that you don't think you can afford the monthly payment. So let me ask you all a question. Do you get a refund? There are certain times of the year where you see people walking down the street with like a stupid smile on their face. You ever see that, Wayne?
All the time. It's Baltimore, baby.
Well, there you go. There you go. Not even just the Baltimore thing, okay? There are people walking around with just silly smiles because they just got a big fat refund check from the IRS and they're all happy, right? And I would say, instead of being happy, you should be crying. And you may hear people say it's a good idea to get a home, and obviously, and to have a mortgage because the taxes and the insurance and the interest, not the insurance, but the interest on the mortgage and the property taxes could be tax deductible and save you money. Well, look, I'm not an accountant, I'm not an attorney, I'm not a financial planner, and I don't think you are either, right? So we're not going to give you any accounting, tax or financial advice or legal advice, but to my knowledge, interest on your mortgage could be tax deductible, and so could your property taxes. So, Wayne, let me ask you a question. If I gave you $1 and said in 16 months, give me back 95 cents, would you do that deal?
No.
No, of course not. But that's what we do when we get a refund. We're letting the government hold our money, and we know we're in periods of high inflation. Every dollar you get back only has 95 cents in buying power. So wouldn't you rather, and the government, I hear people say getting a tax refund's for savings. You wouldn't save it 0%, would you? But that's what you're doing. So what I counsel a lot of my clients is to do, and you all should do this, you really should. If you're thinking about buying a home, the right thing to do is this: get out a sheet of paper and make a budget, right? And put on there your expenses, your car, your insurance, utilities, food, entertainment, underwear, whatever, okay? And at the end of the day, that's your comfort level. If you were getting $3,600 back between your federal and state refund, what you want to do is sit with your tax preparer and withhold correctly. So instead of getting $3,600 back, get $300 back each month additional in your paycheck. It's your money. You're going to get it back. Better to get it back monthly and hold it instead of letting the government hold it for you. And that way you could easily accomplish a $1,300 payment. It would only feel like $1,000. I hope that makes sense. So a great way to make your payments more comfortable is to purchase a multi-family unit. Let me ask another question. I'm sorry I'm so full of questions. But how cool would it be to own a home, have your mortgage payment covered, and have an extra side hustle without leaving your sofa, because that's really what this is. If you buy a multifamily home, you could, a 3-unit, and Baltimore's full of them, isn't it, Wayne?
Correct.
A 2-unit, a 3-unit, a 4-unit. I mean, let's just make something up here. Let's say you buy a 4-unit and your payment's $2,000, okay, your mortgage payment. And you rent out room 2, or you rent out apartment 2 for $1,000. You rent, I mean, just really crazy, silly, below market rents. You rent out number 3 for $1,000, and you rent out number 4 for $2,000. So you've now got $4,000 a month coming in, right? 1,000 from unit 2, 1,000 from unit 3, 2,000 from unit 4. Your mortgage payment is $2,000. So you now have your mortgage payment covered and an additional $24,000, and you're going to have an extra tax write-off because those other 3 units are considered investment properties. But again, we're not giving you tax advice, okay? But something you should all consider if you think you can't afford it. I mean, the con, you're going to be a landlord, so you do have to collect the rent. You're responsible for repairs. You and Wayne will need to make sure, and me, will need to make sure that it's zoned correctly. But, you are going to have other people living in the same property. But if you live in an apartment, that's where you are right now. I mean, here, I actually wrote a book on this. It's called The Real Estate Loophole. And you know what, Wayne? As soon as I put that up, it became a bestseller on Amazon. Because
I do not have that one. I got to get that one.
Yep, therealestatelyoophole.com. I think the cool term for it these days is called house hacking. But basically, you got your whole mortgage payment covered. I mean, how cool is that? And you got a side hustle income. So life is good. So let's switch gears and talk about different types of lenders. Mm-hmm. Which one's better? I hear this one all the time, Wayne. I hear, if I go to my bank, they're going to give me a good deal since I'm a customer. Now, let me be fair. I'm sure that every bank wants to give excellent customer service. I'm sure every credit union wants to give customer service. But if you have $2,000 or $20,000 or $200,000 in ABC Bank, I mean, they're not giving you anything special. You have 20 million in the bank, and yes, you will get a very, very special deal from your private banker at the bank. So here's what happened. Wells Fargo decided to get in the mortgage business. Actually, they've gotten out of the mortgage business now, but when they were in the mortgage business, they own a company called Wells Fargo Mortgage. PNC owns a mortgage company. You know what they called it? PNC Mortgage. Bank of America wanted to get in the mortgage business. They own a company called Bank of America Mortgage. And what tends to happen is the bank-owned mortgage companies, they tend to be a little more conservative, and they also tend to have rules on top of the actual guidelines. So what's best? A mortgage banker, a mortgage broker, or a portfolio lender? A portfolio lender, it just depends on the scenario, but oftentimes this could be a credit union or a small little savings and loan that's actually lending out their own money. Or an independent mortgage banker. Our company is an independent mortgage banker, which means our parent is not a bank. So we're under a little bit less scrutiny, and we tend to be a little bit more aggressive instead of conservative. Or a mortgage broker. Now, the downside to a mortgage broker is they lose total control of the transaction because all they're doing is placing your loan with either a portfolio lender or a mortgage banker. So there's some pros, there's some cons, but if you have a tight loan, a mortgage broker might not be your best option. And when you think about it logically, for them to earn any money, they have to mark up the fees we charge, right? So that's just my 2 cents. Here's some comments from the Baltimore Sun and the Daily Record. Just to, Wayne, I've gone through life with the initials BS and brown eyes, so I like to go maybe a little overboard in telling people, you know, I really am all about, again, just like you, Wayne, giving people knowledge and really communicating through the process and holding people's hands. I mean, not physically, but really making myself accessible, because you're going to have a lot of paper flying at you. And we want to make sure that you're comfortable and know what's happening. So I hope we've given you a decent overview so far. Let's jump into some mistakes. Before we jump into any mistakes, I'm going to ask you once again what I consider to be a stupid question. So I'm just prefacing and giving you a heads up, folks. How many of you would give me $1,000 if I promised never to give it back to you ever and torture you for months on end? Any takers? No. So let me explain why I'm asking you such a stupid question. I see buyers all the time who they're like Zillow addicts, right? And they go on Zillow and they find a home. And I got to warn you, folks, the numbers you see for a mortgage payment on Zillow and Trulia and Realtor.com and all these other sites, they're just wrong. You don't read what they're saying. First of all, they're usually giving inaccurate interest rates, but that payment they have on there is based on you putting 20% down and having perfect credit. And if you're putting 20% down and have perfect credit and can deal with an unrealistic interest rate, that might be the right number. But to me, it's very deceptive, and Congress should do something about it, in my opinion. But the reason I asked you this crazy question, the first step before you even go looking on Zillow would be to get yourself pre-approved. So the reason I asked the question with the $1,000 is because if you're not pre-approved and you go out and buy a house, which is not likely to begin with, right? Because I don't think any seller is going to accept the contract unless they have a pre-approval letter. And I don't think any real estate agent's going to take you out until you have a pre-approval letter. But you'll lose, if you go under contract, you're going to lose your money for an appraisal, for inspections, and you never get that money back. And then you're tortured because the transaction really didn't go the way you wanted it to go. So the first step, don't even look. Let's get pre-approved. And that way you know what you're comfortable with. That'll help Wayne determine what areas are best for you and what to show you that makes sense. The worst thing you can do is fall in love with a house that you can't afford or qualify for, and then nothing else ever looks as good. So let's do it the right way. Get pre-approved first. Let me put that money aside for you. And then Wayne will have an idea of exactly what neighborhoods to show you, what types of properties to show you, and you'll know what you're comfortable with. So I hope you take that advice. And you want to get pre-approved, not pre-qualified. Pre-qualified means everything sounds good, but there's lots of room for interpretation and lots of things. Pre-approved means that we've seen these items, your W-2s, your pay stubs, your bank statements. We've seen a credit report, and then I can call a listing agent that you've put the contract in on and tell that agent, we're not pre-qualified, we're pre-approved. The money's sitting here just waiting. And that usually could be the difference between your offer being accepted or not accepted.
Yep.
Mistake number 3, working with an online lender. Bless you. So I have to tell you that, I don't even need really to say anything. Look at the lady. That's the whole story.
I love that. Fantastic.
I couldn't have said it better. But the reality is, I hope you've seen how much Wayne and I truly care, and that we want to help and we want to impart knowledge to you. And an online lender, that's not what they're cut out for. That's not how they're built. If you find Wayne calls me sometimes at bizarre hours, he'll call me Saturday afternoon, Sunday morning, whatever you need, because that's my job, right? And you're not going to talk to an online lender. You might talk to them Monday through Friday. That's about it. Um, so, I mean, I'm not going to boast here, but you know, I like when people send me their success stories. Makes me happy. So you can read some of these comments or take a screenshot, whatever you like. All right. Not knowing your score. We talked about this, but your credit, two things, just to recap. Your credit score on Credit Karma is not your credit score when you're applying for a mortgage, and us running your credit report does not hurt your score. Mistake number 5, and I've been saying this to my wife forever, right? That ugly is the new beautiful. Ugly, there are so many ugly homes in the Baltimore metropolitan area that are in great areas and they just need a little love, right? And this could be a bonanza for you because almost everyone I've ever done walks in with equity. But think about this. We can lend you the money to buy the home. You can pick out the kitchen. You can pick out the flooring. You can pick out the paint. You can renovate the bathrooms, put in a jacuzzi. You can do whatever you like. Okay, finish the basement, put on a new roof. We can lend you the money to do all of it in one loan. And folks, we're in a competitive market. And one of the beauties of this program is everybody avoids ugly. That's a mistake because ugly could be the new beautiful and you could have equity. I did one on Liberty Road not long ago in the county in Randallstown. The people bought the house. It was a foreclosure. They bought it for $280. We lent them $50. So they were in for $330 and the house appraised for $450. Did you hear that? Wayne, you there?
I'm here. I'm here.
Okay. They have $120,000 in equity. These are those old stone homes. They don't even build homes like this anymore. On Liberty Road.
I wanted it to sink in. I wanted to stay quiet and just let it sink in.
Yeah. I mean, they have 120,000 in equity, but here's what's more important.
Yeah.
They've now been able to customize a home in a great neighborhood with big mature trees. And, I mean, it's a stone house. They don't even build stuff like this. And you know, and now they have everything they want exactly the way they want. They took it down to the studs and redid the whole place. It's gorgeous. And here's another mistake: waiting. Let me explain markets to you folks. What happens is this: when rates are low, buyers flood into the market and drive up the price of homes. We've seen it over and over and over. And I'm going to say something a little cheesy and corny, so forgive me. But what we tell people right now is don't worry about it's always the right time to buy a home when it's the right time for you. But marry the house and just date the mortgage because you can always refinance. And one of the programs that's unique to CMG Home Loans is something called Rate Rebound. And you can refinance as often as you like and as often as it makes sense. I think the rate has to be 0.5% lower. Anytime from 6 months to 5 years after you settle, we will give you a free refinance. No, when I say free, we're not charging you, okay? And we'll give you a credit to cover, you know, some of the title fees. So it's a no-lose situation. So I'll leave this up here for a second. I hope each and every one of you came away with something you didn't know before you came on our workshop. And again, I'm happy to speak with you and answer your questions. Wayne and I work very closely together. And our goal is to, you know, Wayne really is your quarterback, okay? And he's going to make sure that all the pieces of the puzzle are in place. I'm just one piece of that puzzle, but happy to help. Here's my information, and I'll turn it back over to you, Wayne.
All right, Brian, thank you so much. I don't know if you guys notice, sometimes I was looking down, like I've got a page of notes. I don't know if you guys have a page of notes. Um, Good stuff. You know, there's some things that I even forgot and relearned. Brian's always teaching. I know he doesn't like the boast, but you know, I've been doing this a while. I know he's been doing this a while, and I had a lot of interactions with a lot of different folks. And Brian's done the loans for all of my family. So, you know, I trust him. He knows what he's doing. I think one thing that he and I really do well, not that we, look for it, but we're really good at getting the hard deals closed.
Yeah.
If something's tough, if something comes up during the transaction, even if it's, heaven forbid, 11th hour stuff, we always get it to, knock on wood, the closing table. Um, we're really good with that. That was one of my notes. The pre-approved, not pre-approved slide here, I know we talked about that, and Brian pointed out a very, very important point to you want to know what you're working with before you and I hit the streets and start looking for houses. Brian mentioned there's what you can afford and there's what you want to afford. So definitely figure out what you're working with. Okay, this is what I can afford, but I really want my monthly number to be around here. So then you and I would go look at houses that you're more comfortable with. Because that's what it's all about. We want you to be happy all around. Let me see another one of my notes here. The online lender was pretty funny. It's again, it's very helpful to have someone like Brian, a local lender, where phone calls, he always answer them. If I need to get to his office, if we need something, if we need a document, if heaven forbid, again, something happens and we have to jump on it, I can get to Brian. I can't go to Rocket Mortgages. I don't mean to talk smack. They just come to mind, but I can't go to their office and knock on the door and say, hey, I need this. What's going on? Again, and I don't really have to worry about that with Brian. We're always in sync. We almost know what to expect through every step of the transaction, and it's fantastic. So that was funny when you showed that slide with the lady chewing on her computer, because I've done that in the past. I think, the last thing that I wanted to bring to the attention, Brian mentioned some money that you're going to spend up front with inspections and things like that. And that's another thing that I pride myself on a little bit. Is my background is kind of steeped in engineering. And so when I walk into a house, if it's falling down around itself, I'm not going to be the guy that's like, yeah, we should get a home inspection here. It's like, maybe we don't waste money on a home inspection for this one. Maybe we chalk this up as a learning experience and let's go look at some more houses and see what we've got to work with there. Again, we don't want to just throw money around willy-nilly. It's emotional process. Brian and I make it very fun. I warned you about some corny jokes. Luckily, he kept his at bay, and I've been good. But we do have a good time, and we really love what we do. It's why we still do it for as long as we've been doing it, because we really enjoy it. So those are my points. Those are my notes. Yeah, that's what I got.
All right. So what's the next step, Wayne?
So the next step is, I see my infos here on the screen. You can take a screenshot of this, or you can reach out to either of us. We're both at this 8 days a week. If you have any questions at all, it's no free consultation, no obligation, all the cheesy stuff. It's really just a conversation with whatever you need, whether you're looking to purchase something soon, or if you just kind of have the juices going and you want to start the process and maybe you're a few months out. That's cool too. It's important to start now to see where you're at, and then you can build to where you want to go and end up eventually where you want to be. And we're there to help you through that every step of the way.
All right. Well, Wayne, again, I thank you for having me on this workshop. And folks, I thank you for staying for the workshop. I hear everybody snoring, so I guess we did okay.
Yeah, I think we did well.
All right. So we look forward to speaking with each and every one of you individually. Again, there's no cost, there's no obligation. Get your bearings, as Wayne said, and we will absolutely do our best to provide you with the education and knowledge you need to make the right decisions. So thank you.
Thank you, Ryan.